I always like to say that success leaves clues, and what that means is if you can find someone else that's successful and you can do about the same things that they do, you should have about the same success. Now, in this video, I break down one of the most successful investors and traders of our time, and you're going to be able to learn the exact same things that you can mirror in your own investing life so you can have huge success as well. So stay tuned. Welcome back, market disruptors. Today we are going to break down one of the most successful investors of our time. I spend a lot of my time figuring out what other successful people have done. Successful businesses, successful entrepreneurs, successful fathers, all these types of things. Anything that I really want to have more success in my life, I study other people who are successful. I don't need to recreate the wheel. Really, at this point in life, there's nothing that we're going to invent that's new. And so pretty much anything that we're already doing, there's already a successful plan laid out for us. So rather than trying to figure it out on our own, we just take someone else's successful plan and we implement those same things. And I do this all the time. It's what's allowed me to really scale or even maybe hack my growth, and I know it can do the same for you. One of the guys that I look at is one of the most successful investors and traders in this world here, Stanley Druckenmiller, and he has had amazing success. One of the best success stories in the world. He's averaged 30% returns for about the last 30 years, which is amazing. Let's just consider that over that same time period, the stock market has averaged about a 6 to 8% return, 6 or 8% return. He's averaged a 30% return. But what's even more important than that is not just that he's had a 30% return over 30 years, which again is amazing, but really what's actually super amazing is the lack of volatility. And what that means is it's not that he's winning really big and then losing some. His winning record is almost perfect. For those of you guys that don't know, the larger your portfolio gets, the harder it gets. When you just have a little bit of money, it's easy to jump in and chase these high yield things. But when you have big money, he had up to $20 billion. When you have $20 billion, it gets harder to find these types of investments. Take a look at how he's done it, right? More importantly, what we can do. So the first thing that any good investor, any good trader has to have is there's certain characteristics, there's certain character traits. And now, some of us, maybe we're more born with it. There's the old nature versus nurture argument. Were you born that way or did you learn that way? I believe we can all learn to be that, and maybe you're not the best at it today, but I believe you can get better and better if you try. A couple of the character traits that are super important, one that I've tried to be really good with, my wife doesn't appreciate it so much, but it's mental flexibility. And mental flexibility is the ability to be able to change your mind a lot. The answers change, right? So like I need to be flexible in my decisions. Hey, I think this is the right way to go today and I'm committing down that path. But as soon as new information comes, I need to be flexible to get out of that. Mental flexibility. Independent thinking is another really big one. So you've probably heard many times, or me say many times, that being an investor, really we want to be the contrarian. We talk about buying when there's blood in the streets, selling at the top, buying at the bottom, all these things, right? You have to be an independent thinker. If you're just moving along with the herd, you're never going to have the success that you need to have. Now, this is a tough one. Also, extreme competitiveness. Now, you don't have to be the most competitive person, but you do need to be pretty competitive. You have to hate losing because especially when it comes to your money, the number one way to make money is to never lose money. And so you don't want to lose. You need to be constantly learning. So you need to be studying and learning. I mean, this is a high stakes game here. It's your money on the line, right? And you need to be really self-aware of what you're good at and what you're not good at. You need to be understanding if it's a bias in your own life that's preventing you from making a move. A couple of things that he's done. One, he used to work as an analyst and he would research stocks and he would deliver these reports to his higher ups and they'd look at him, kind of said, these aren't really any good. Hey, you did a really good job of telling us who the company is and the market they're in and all of that, but that doesn't really tell us about the stock or why it's going to go up. And so he learned through that, all that information he was putting together was kind of worthless. I mean, you can learn everything you want about the company, their product, and even their industry, but that's not really enough. What he learned to do was he learned to look at the factors that cause the price movement. Why would this go up? What are the factors that are going to change that? Not the fundamentals. So when you're looking at stocks, you're looking at fundamentals like, cash flow and PE ratios and stuff like that. And he learned that earnings matter, but not in the way that most of us think they do. Most stock analysts are looking at either priced predictions, and then they're looking at how well the company matches up to those prices. Did they make it? Did they exceed them? Did they beat them? Did they come up short, etc.? The actual earnings don't really matter so much. One particular stock, maybe it matters more, but when you're looking at a sector, it's a little bit different. Some of the singular stocks, he said, maybe would be like banking stocks or chemical stocks, for example, was one that he gave. And he talks about how those are really triggered by capacity and supply and demand, right? A lot of price movement is based off of supply and demand. He said that it's really based off of future earnings. So the earnings do matter, but really it's about future earnings. And he talked about the market as a future discounting machine. So we can buy future earnings at a discount today. And one reason why I love investing in technology like Bitcoin, like cryptocurrency, is because of the future potential. Right now, it's so early, it's not even really being used in mainstream adoption today. And so I believe there's massive potential in the future for profits to be made, right? So we're buying those future earnings, those future profits at a deep discount today because we're getting so early. When Druckenmiller looked back and kind of summarized his job for the last 30 years, is that he was anticipating changes. So again, the contrarian, going against the crowd, looking past what everybody's expecting. He's trying to find these changes, these trends that nobody else is expecting. So again, Bitcoin, cryptocurrency is a perfect example of that. Now, if you're watching this, you're probably one of the few early adopters that are kind of the early believers. But for the majority, people think it's ridiculous. People think it's never going anywhere. People think it's going to zero, etc. And so that gives us this amazing opportunity to get in early, to buy at a discount what would be in the future. I know I'm going to get plenty of comments from people saying that it's going to zero and it's never going to be a success. Okay, we don't know the future. I don't know the future, and neither do you. But I believe it has massive upside. And so I would never put 100% of anything, of my money into anything. But I think that it deserves to have a little bit of your attention for the massive upside that it has. If it goes to zero, you lose a little bit. 5%, 10%, not a big deal. But if it has the success that I believe it's going to have, it could change your life. We always want to know what our reward is and what our risk is. Again, Druckenmiller says that we always need to protect our capital. The best way to make money is not to lose it. So we always want to protect our capital. Once you get wiped out, you're out of the game. And what he said is it's not whether you're wrong or right, but it's how much you make when you're right. It's also how much you lose when you're wrong. What we have to do is we have to let our winners run. So what happens is a lot of times people are really quick to lock in profits. Now, I know in the past, especially in the cryptocurrency space, after the crash of, January 2018, people wish they had locked in profits. We want to cut our losses short so we don't lose everything, but we also want to allow our winners to run long. So what happens is a lot of times people are so quick to make profits. Oh, hey, 30%, 40%, that's a great return. I'll take it. And, I do say that no one ever went wrong taking a profit. However, take some profit, take some money off the table, de-risk yourself, and then allow that to run. You de-risk yourself to taking money off the table, and then you're using stop losses, you're watching the positions, you're staying flexible, right? That was one of the key things. Change your thinking, you change your life. It all starts from your mind, it all starts from what you consume, it all starts the way that you think and look about things. You have to have a winner's mindset in order to succeed. And what that is that's being decisive. It's like, not getting caught up in should I or shouldn't I, but making your best guess and making a decision and going for it, being decisive. At the same time, even though you're committing and you're moving forward, you're always staying open-minded. You're always continuing to bring in new information. You're staying humble. And I see a lot of criticism on social media from traders and investors. They say, oh, you can't get it right. You say it's going to go up and then you say it's going to go down. That's because they're being open. They're being flexible. They're not being wishy-washy. This is just the way it works. We take in information as it comes. So be decisive, but stay open-minded, stay flexible, and stay competitive. Those are the keys. So that's it. That's what we have for this week's video. I hope that makes sense to you. Leave comments down below if you have any questions about any of this stuff. And that's it. To your success. I'm out.